I don't own gold because I think it might go from 2,600 to 3,000. That's why I don't own it for that reason. I own it because I'm afraid it's going to go to 10,000. I own it because gold historically has been a store of value during periods of time when people were concerned about the maintenance of their purchasing power in fiat instruments. If it's going to $3,000, not the faintest concern, not the faintest interest, neither. I own gold because I don't understand arithmetically how it can't go in nominal terms to the next digit.
In today's news recap, silver gains as investors continued to assess the latest economic data. Silver prices gained 0.42%, bolstered by expectations of a Federal Reserve rate cut in December. Core PCE prices in October remained aligned with market expectations, maintaining hopes for a 25 basis points rate cut, which supports silver by reducing the opportunity cost of holding non-interest-bearing assets. Meanwhile, robust Q3 GDP growth, strong personal income and spending data, and historically low unemployment claims highlighted the resilience of the U.S. economy. Initial jobless claims remained steady at 213,000 for the week ending November 23rd, below market expectations, reinforcing the strength of the labor market. Globally, silver faces its fourth consecutive year of structural deficit, with a 4% decline expected in 2024, bringing the deficit to 182 million ounces. Despite a 1% increase in supply from key producers like Mexico, Chile, and the U.S., record industrial demand, recovery in jewelry consumption, and higher recycling will continue to strain availability. India's silver imports surged nearly tenfold to 4,554 metric tons in the first half of 2024, driven by solar panel and electronics demand, as well as investors seeking better returns compared to gold. Silver is showing signs of fresh buying, with open interest increasing by 11.4% to 25,927 contracts. Prices are finding support. On the upside, resistance is pegged, and a move above could see prices testing higher highs. Now we'll show you more clips, but first, check the pinned comment, especially if you're a stacker, as we have a massive Black Friday deal that every stacker should take advantage of, and hit the like and subscribe buttons so you do not miss out our recaps. Enjoy the episode.
One of his readers said to me, "Rick, when is the gold price finally going to move?" I would say to that person, I'd be old and sage, it's going to move in the year 2000. In the year 2000, it was at $253 an ounce. Now it's at 2,600. In other words, it's up, what, sevenfold? Yeah. Gold has increased by almost 8.5% compounded for 24 years. It's done exactly what it was supposed to do. It's protected by purchasing power for 24 years. So when you're asking me when gold's going to move, 24 years ago. What I really like about it from an investment perspective is that it has this wonderful track record, which nobody cares about. The market share of precious metals and precious metal securities in the U.S. market, the market that I know the best, is less than 1/2%. Less than 1/2% of savings and investment assets in the United States are precious metals related. The 4-decade mean, according to J.P. Morgan Chase, not some old bald gold bug, J.P. Morgan Chase, is that the market share of precious metals and precious metals securities over the last 40 years in the U.S. market has been 2%. Gold doesn't need to whip the U.S. dollar. Gold doesn't need to break the treasury market. All it has to do is revert to mean. If it reverts to mean, the market share in the U.S. market grows fourfold. Now, can you imagine what a fourfold increase in demand for gold and gold stocks in a market that controls 23% of the savings and investment assets in the world would do to the gold price? I mean,
exceptionally.
It's a stupid number. Bitcoin is what, a $3 trillion asset class? Robert Friedland describes that as a pimple on an elephant's ass. Yeah. It doesn't matter. Yeah. I mean, yes, on the margin, right? The penny stock moron and the crypto moron are very similar species. But if you look at a global market for savings and investments at the $750 trillion level, gold is a sideshow and Bitcoin is a sideshow. They don't matter. The circumstance that will cause the gold price to move is a circumstance where perhaps Bitcoin can be accommodated in the move too. My suggestion is that they serve different purposes. Gold is a store of value and a medium of exchange. Bitcoin is a network and a transfer mechanism. So I think at their heart, they're different asset classes. Right now, they're regarded as momentum. They're regarded as trading vehicles. I engage in conversations here with people about Bitcoin, and I admittedly know almost nothing about it.
They must love you.
And I would suggest that I know substantially more about it than they, and they're advocates. Despite the fact that I know more about it than they do, I profess no knowledge. The real knowledge they have is that they've watched it go from 1,000 to 100,000. That's the whole knowledge. And the fact that the asset class is up 100-fold, they somehow think makes it more attractive. Now, let's say, are you married?
Almost, December 30th.
So let's say that your fiance went to the grocery store and the price of bananas was up 100-fold. She would be very logical and not buy bananas. But because an asset class is up 100-fold with no demonstrable change in utility, why is that good? This is not a capital short market for high-quality issuers. The problem is in the junior sector, there's not very many high-quality issuers. It's mostly the lame, the halt, and the blind. We've talked about this on Kitco before. If you merge the whole public company universe in mining to Junior Explorco, one company worldwide, merge these 2,500 or whatever they are companies into one, that company in a good year would lose $2 billion. In a bad year, it'd lose $10 billion. So you tell me, how much do you pay to lose $2 billion a year? Should you pay 8 times losses? In a bull market, should you pay 15 times losses? The truth is that if you invest in the sector overall, I'm talking about the juniors, over a decade you will go broke. That's what will happen. That disguises the fact that there's a subset of issuers, perhaps 5% of the total population, that generates so much performance that it adds legitimacy and sometimes luster to a sector that loses $2 billion every year. You pointed out to me, and we'll make the company nameless, a junior company recently was successful raising $2 billion and as a consequence awarded themselves $10 or $15 million worth of restricted stock units for doing nothing.
In today's news recap, Gold Terra raises funds for exploration at Conmine and Northbelt Properties. Gold Terra Resource Corp closed a non-brokered private placement raising $572,500 Canadian dollars through the sale of 11,450,000 shares at 0.05 per share. Proceeds will fund exploration at the Conmine option and Northbelt Properties. CEO Gerald Panetton shared plans for the Campbell Shear target. Our 2024/2025 program will resume with the wedging program, which is testing the Campbell shear structure with our completed master hole below the existing working of the Conmine, which produced 5.1 million ounces of gold at an average grade of 16 grams per ton. Now we'll show you more clips, but first check the pinned comment, especially if you're a stacker, as we have a massive Black Friday deal that every stacker should take advantage of, and hit the like and subscribe buttons so you do not miss out our recaps. Enjoy the episode.
No. Okay? I don't own gold because I think it might go from 2,600 to 3,000. That's why I don't own it for that reason. I own it because I'm afraid it's going to go to 10,000. I own it because gold historically has been a store of value during periods of time when people were concerned about the maintenance of their purchasing power in fiat instruments. And when I consider the debt problem that you and I just discussed, relative to the national income, I don't believe there's any way in the world that the US dollar can maintain its purchasing power. That's why I own gold. Do I know or care if it's going to $3,000? Not the faintest concern, not the faintest interest, neither. I own gold because I don't understand arithmetically how it can't go in nominal terms to the next digit.
Right. Yeah.
Your audience needs to ask themselves what their outlook for the world economy is going to be for the next 5 years. I'm a credit guy, not an economist. Absent a recession or a depression, the copper prices, nominal copper prices in US dollars are much higher, simply because we have a supply problem. Your viewers should look at me and use me as a visualization for the copper business. 71 years of age, fat, bald, past his prime. I look like the world's copper mines. Bingham Canyon's 160 years old. Chuquicamata's 115 years old. The granddaddy, Grasberg, is my age, 71 years of age. We are, all of us, Rule, Chuquicamata, Bingham Canyon, past our prime. The industry has not been investing enough for 30 years to replace these aging giants, including this industry replacing Rule. All of this has to happen. Until it does, we face a real issue with copper supply. The part of copper demand that seems to be of interest to people like us is things like data centers, things like electric vehicles. The other part of demand that your generation has to understand, your generation that lives in the West, is that there's 1 billion people on Earth with no access to primary electricity. There's another 2 billion people on Earth with access to only intermittent or unaffordable electricity. All of those people want to live like you and I. And in order to do that, it takes a ton of copper. Copper is required to generate electricity. Copper is required to get the power from where it's generated to where it's consumed. Copper is required to consume the power. There's this whole separate part of copper demand that has nothing to do with technology. It has to do with the ascent of humankind. We have to do it for economic reasons, and we have to do it for humanitarian reasons, and we're going to do it, and that's going to be extremely bullish for copper. Whether or not this supply-demand imbalance becomes critical in the next 5 years is wholly a function of whether we have a global synchronized recession or depression. And I'm not smart enough to tell you if we're going to.
What do you think about Rick Rule's long-term bullish stance? Do you agree with his assessment of gold and silver as essential stores of value in these uncertain times? Share your thoughts in the comments below. We'd love to hear your perspective. Now watch this video right here because you'll love it. I'll see you on the other side.